There are two losses. One is called normal loss, other is called the abnormal loss. Your total expense is 30 lakh, 23,330 minus wastage realized 30 lakh, 73,330. This is transferred from the last process. The output has become the input. Your input is 20,000 units. Per unit 12 rupees, 2,40,000. Hello, my dear student. I am Dr. B.S. Subramaniam, called by name Dr. VSS, Professor in Commerce and Management, Vidhyaashram First Grade College, a Temple of Excellence, Mysuru. I am going to hand Advanced Cost and Management, 5th semester BCom. The session goes in favor of process costing. I told in the last session, if you put the raw material in the first process, the finished product of the first process become the raw material for the second process. The finished product of the second process become the raw material for the third process, where you get the finished product. There are two losses. One is called normal loss, and another is called the abnormal loss. Normal loss cannot be avoided, but abnormal loss can be avoided. Normal loss is a regular loss which cannot be avoided, where abnormal loss, if we require about 10,000 units to produce, if we produce only 9,000 units, the difference is loss. That loss we called as abnormal loss. So, normal output is there, or standard output, more than the standard output, abnormal gain, less than the standard output, abnormal loss. Now, I am going to explain the particular problem. A product passes through three processes, P, Q, R. The normal wastage of each process is P 3%, Q 5%, R 10%. The wastage of P sold at rupees 10 rupees per unit. That of Q 30, that is a realization value per unit. That of R 40 per unit. The expenses were as follows. 20,000 units were introduced to process P at rupees 12 per unit. So, we are going to work out and explain the particular problem. First, we will go with the process P. So, direct material, PQR, direct material 1 lakh, direct expense 1 lakh, direct wages 5 lakh, output in units 19,000 units. We'll go to a problem now. Process P. All here particulars, units, value. Particulars, units, value. How many units have been particular units value, particular units value? How many units have been introduced? See that? 20,000 units at rupees 12 rupees per unit. How many units? To input, we have introduced 20,000 units at rupees 12. What the problem says now? 20,000 units were introduced at rupees 12 per unit. So 12 twos are 24, followed by 40. 1, 2, 3, 4. So 2,40,000. So this is an expenditure. So 20,000 into 24. This is 12 twos are 24, followed by 40. So 2,40,000 expenditure. Then direct material, another expenditure, 1 lakh. This is 1 lakh. Direct expenses 1 lakh. Direct expenses 1 lakh. So this direct wages 50,000, 5 lakh. Direct wages. These are all the expenditure of process P. 5 lakh. See the board. What are the expenditures are? 1 lakh to material, 1 lakh to expense, 5 lakh to wages. How many output? 19,000. Here input 20,000 units. This is you put about 20,000 units. This is your input. Here your output. How many output is count? 19,000 units. So there is a difference of 1,000 units. By normal loss or normal wastage. So how many units have been introduced? 20. What's your normal loss? See that? The normal wastage of is 3%. Is 3% on 20,000. So 3% of 20,600 units. Check this. 20,000 into 3 divided by 100. 600 units. Wastage. Per unit is sold for how much money? See that? Sold at rupees 10 rupees per unit into rupees 10. This is so 6. It becomes 6,000 rupees. So your input is 20,000, 19,000. Difference is 1,000 units. But actual output is now 19,000 out of 20,000. How many units gone? 600 units gone. We'll go for a working note now. In working note 1, input 20,000 units minus normal loss. Your input is 20,000 units. Your normal loss is 600 units. Your output should be 19. This is standard or normal output. The normal output should be 19,400. What's your actual output? 19,000 minus actual. 19,000. Your standard output is 19,400. Your actual is 19,000. What's the difference? 400, which is called abnormal loss. This is in units. Now, working note number 2. Total expenditure. Total expenditure. This is land, no? 2,40,000, 3,40,000, 4,40,000, 9,40,000. 2 plus 1, 3 plus 4, 9,40,000. 9,40,000. Minus amount realized, the wastage realized. Your wastage realized is 6,000. $9,34,000. Normal output. Normal cost. Your normal output is 19,400. Your expenditure is 9,34,000. Calculation of abnormal loss. Calculation of abnormal loss. Normal cost formula. Normal cost divided by normal output multiplied by abnormal loss units. What's your normal cost? 9,34,000. What is your normal output? 19,400 into abnormal units 400. Value 9,34,000 divided by 19,400 into 400. 19,257 or 19,258. Check once again. 9 lakh 34 followed by 30 divided by 19,400 into 400 units. 19,257.73,258 abnormal loss. 19,258 by abnormal loss. How many units? 400 units. What's the value? 19,258. Here 400 units, 19,258. So add the figure. This is 20,000 units. 5 plus 6, 7, 8, 9,40,000. Here 20,000 units, 9,40,000. Out of that 1,000 gone, no? 19,000 units value. Here 9,40,000, 940 followed by 30 minus 6,000 minus 19,258. 9 lakh 14,742. 9 lakh 14,742. This is transferred to process Q. We'll explain here. See that your input is 20,000 units, per unit 12 rupees, 2,40,000, direct material 1 lakh, direct expense 1 lakh, direct wages 5 lakh. By normal loss is 600 units, you put 20,000, 600 gone means 19,400, actually is 19,400 is there. Then here no, even when you add the 9,40,000, deduct the 6,000, difference will come. You have to, what's the formula? You have see the working out. 20,600, 19,000 for actually its loss. Your total explanation 9,40,000. How much realized? 6,000, 9,34,000. Normal cost divided by normal output multiplied by abnormal loss units. Your normal cost is 9,34,000 divided by normal output is 19,400. Your abnormal loss value is 19,258. This will be transferred to process Q. Particular units value, particulars units value. Here input 19,000 units. You have to write in exam input and output, input and output. What's your output? See that 18,200. Your output is 18,200 units. Here 800 units. 2 process X, transfer entry, process P. How many units? 19,000 units. What's the value? 9,14,742. 9,14,742 is the value. 9,14,742. This goes to process P, has been transferred to here. This is Q. So what are the expenditures? See that. You come back here. Direct material. Direct material. Direct material 1,50,000. Transfer entry. Direct material is 1,50,000. Direct expenses 1,20,000. Direct material is 1,50,000. Direct expense is 1,20,000. So direct material, direct here over. Direct wages 9 lakh. Direct wages 9 lakh. Heavy expenditure by normal loss. What's the percentage? See that? 3 over 5 percentage. 5% on 19,000 units. So 19,000 into 5 divided by 100. 950 units. Per unit selling price, see that? Here 950 per unit. Here 10 rupees over. Here at rupees 30. 950 at rupees 30. 950 units at rupees 30. 28,500. 30, 3 5s are 20, 3 5s are 15, 3 9 28,500. Now, close this. Go to working note now. Same working note. First working note number 1. Particular units. Input 19,000 units. Minus wastage or normal loss 0. This is 5, 0, 8. 18,050 is normal output or standard output. So how much is introduced? 19,000 units. So how much wastage? 950. Normal output is 18,050. But actual output 18,000 minus actual output. $18,200. How much more? 150 units more. Abnormal gain. Actually, you require 18,050. You got 18,200 is there. 150 is more. So 18,200 minus 18,050. Now, total expenses. Working note number 2. Total expenses. Here. We'll go with the total expenses. 9,14,914. 9,14,742 plus 1,50,000 followed plus 1,20,000 plus 9 lakh, 20 lakh, 84,742. 20 lakh, 84, 20 lakh, 84,742 minus wastage realized. See the book. 28,500. Deduct 20 lakh 84,742 minus 28,500. 20 lakh 56,242 normal cost. Working note number 3. Value of abnormal gain. Normal cost divided by normal output multiplied by abnormal gain units. What's your normal cost? 20 lakh 56,242 242 divided by normal output 18,050 into 150 is the gain. 20 lakh 56,242 divided by 18050 into 150. This is rupees 17087. 17,087. 1, 2, 3, 4. So 170,878 and almost 8. 17088 is the abnormal gain. For how many units? 150 units. Here. To abnormal gain 150 units. Value 17,088. Add the figure. 2 plus 8, 10. 1 plus 4, 5 plus 8, 13. 1 plus 4, 7, 8. 4 plus 7, 1. 1, 1 plus 2, 5, 7, 9, 10. 1, 9, 10, 11, 12, 21. 21 lakh 1,830. And this is 19,150. 19,150. 21 lakh 1,830. Out of 950 gone, see that 19,150 minus 950, 18,200 is your output. Then 21 lakh 1,830 minus 28 500, 207, 20 lakh 73,330. Check this. 0, this is 3, 5 plus 3, 8, then 8 plus 3, 11, 1 plus 2, 3, 10, 1, see. So, transfer to process R. This is the output of process Q, become the input for process R. So, the output of the process P become the input for process Q. The output of process Q become the input for process R. We'll go to process R now. Process R, particulars, units, value, particulars, units, value. Transfer entry to process Q. What's the output? 18,200. The value is 20 lakh 73,330. 20 lakh 73,330. This is transfer from the last process. The output has become the input. We'll see the expenditure of this process. This over. Come back here. Direct material 50,000. Direct expenses 2 lakh. Direct material value column 50,000. Direct material 50,000. So this over. Direct expenses 2 lakh. Then what do you got? Direct wages 7 lakh. See that? First one, your output here 20,73,330, direct material 50,000, direct expense is 2 lakh, direct wages is 7 lakh. By normal loss, what's the percentage? See that? 10% on input, 18,200. So 10 gone, 1,820 at rupees 40. 1,820, 1820 into 40, 72,800. 18,200. So 1,820, 1,820 into 40, 72,800. Then here close this working note. Same working note. Working note number 1, particulars, units, input. See that? Your input is 18,200 minus normal loss 1,820, deduct 14,380 is normal output. Your input is 18,200 minus normal loss is 1,820. 16,000, 8 plus 2, 10, 1 plus 3, 4 plus 8, 12 plus 7 plus 1, 16,380. This is normal output, working note number 2, minus actual output. So your standard output is 16,380. What's your actual output? Here your input, 18,200. What's your actual output? Problem, 16,200. Output, 16,200 units. Your input is 18,200, 16,200, 2,000 almost. Come back to working out. Actual output, 16,200 units. We require how many units? 16,380 units. But actually they took out how much? 16,200. How much less? 180 units. Abnormal loss. You require how much units? 16,380 units. But actual output is 16,200. How much has come down? 180, which is called abnormal loss. Working note number 2. Total expenses. 20 lakh, 73, 330, 330 plus 50,000 plus 2 lakh plus 7 lakh. 30 lakh, 23, 330. This is 330, 3, 2, 30 lakh, 23,330, 18,200. Now, working note number 2. Total expenses, 30 lakh, 23,330, 30 lakh, 23,330 minus wastage realized, normal loss, wastage realized, working out Wastage realize 28,500. Your wastage realize is 72,800. 72,800. 29,50,530. Normal cost. Check once again. Your total is 30,23,330. How much amount realized? 72,800. Your cost become 29,50,530. Value of abnormal loss. Value of abnormal loss. Here total input 18,200 minus normal loss 1,820. Actual output required is 16,380. But actual output taken out only 16,200. How much less? 180 is called abnormal loss. Your total expense is 30,23,330 minus wastage realized 72,800. The normal cost or the standard cost 29,50,530. Value of abnormal loss, normal cost, normal output multiplied by abnormal loss units is equal to. What's your normal cost? 29,50,530. Normal output 16,380. Abnormal loss units 180. So 29,50,530 divided by 16,380 into 180. 32,423. 32,423 is the amount realized on abnormal loss of 180 units. Abnormal loss how many units? 150 units. Value realized 17,088. Bring out the difference. 18,200, 30,23,330. 18,200 into 10 by 100. 1,820 units. It's okay. 1,820 units. So 18,200, 1,820 units, 0, 8, 3, 6, 16,008. Actual output 16,200. This is 180 units. So how much you have taken? This is 180 units. So 20 lakh 56,242 divided by 18,050 into 180. So it will come 20,505. 20,505. 20,505. We'll repeat. 20,505. 20,505. Add the figure 0, 2 plus 8, 10, 1 8 minus 10. This is 2, 2 plus 8, 10, 1 plus 8, 9, 1, 1,820. Finished product 116,200. Now add 2 plus 8, 10, 1 plus 8, 9 plus 1, 10, 18, 1 plus 1, 2, 6, 18. 16,200. You bring out the difference 30 lakh 23,330 minus 20,505 minus 72,800. 293 0025. 0025. So 29 lakh 29 lakh 30,025 is the finished product value for how much money? For 16,200 units. You introduce 20,000 units. At the end of the year, how many units has come? 16,200 units, 29 lakh 30,000. See that all the working notes, same thing here. First is total input minus normal loss, that is normal output. If this is your standard, if this is more, abnormal gain. If this is less, abnormal loss, then total expenditure, what is the amount realized, should be deducted. Balance is called normal cost. What is the formula for abnormal loss? Normal cost divided by normal output multiplied by abnormal loss units. Here, so if you get 32,423, it is 20,505. The difference is like this. So all the problems will work out same thing. So first you must be in a position to work out. Major question will come here. All in the next class, we'll go to, there is another method is there. We'll go to another method, crushing, refining and finishing process. We'll have it in the next session. Till then, goodbye. Meet in the next class with another problem. Until goodbye.